Welcome to Real Vision Crypto. I'm Ash Bennington. I'm joined today by JohnPaul Baric, CEO of the Miningstore. JP, welcome to Real Vision Crypto.
I'm excited to be here.
Well, I should say welcome back. You've actually already appeared on the platform with Santiago Velez a couple of years ago, where you guys did a real technical deep dive on what you guys do at the Miningstore. I'm really curious for people who don't necessarily have strong backgrounds in technology to talk about what mining is, what its significance is, particularly in the Bitcoin network.
So cryptocurrency mining is the way that new transactions and new Bitcoins are created. So every Bitcoin started off from a newly minted block, and that block was created by a miner. Now, the unique thing about cryptocurrency miners is that they allow anyone to sell energy from across the world to the Bitcoin network. When I mean sell energy, they mean put the energy that they're buying from the local power station into that computer, which is a miner device. That mining device does some math problems and calculates these things called mining blocks effectively. And every time it gets a block, it gets paid. And so they're taking the energy that only could have been sold to the consumer at the local level, and they're selling it to this global marketplace. And that's why Bitcoin has become this massive energy buyer across the world. But that's like what Bitcoin mining is at a high level.
That's really fascinating. So 2 points. First of all, what you're talking about with mining effectively is the ordering, confirming, and publishing of the transactions that have taken place on the Bitcoin network, which provides transparency to anyone who can run a full node or who wants to run a full node. But this idea of almost this energy arbitrage structure that you just described is really interesting, and maybe something that most people haven't thought about in quite that way. Talk a little bit more about what you mean by buying energy at the local level and then selling it in a global fungible commodity market.
Sure. So when you think about the local energy markets before Bitcoin, you were buying energy in Texas and Iowa, and it had to be used very close to where it was produced. That's because energy or electricity is a commodity that has to be utilized immediately. We can't store energy effectively, not like oil or gold or steel, where you can put it away and take it out a year later. Electricity needs to be utilized immediately. And so within that sense, the electric participants in the market, the utilities, the wind farms, the nuclear plants, every single one of those groups has to match the energy demand of the grid. And so they're not making more energy than the grid needs, and they're always trying to match it so that as we ramp up our consumption, so in the mornings when everyone's turning on their coffee, or when everyone's turning on their air conditionings in the afternoon, they're matching that demand with consumption. Well, Bitcoin mining came in and said, what happens if we could match energy purchasing from a global level with something called the Bitcoin network? And so what I mean by that is that the Bitcoin network is always buying energy. It's always saying, hey, I need a block, I need newly minted Bitcoins. And Bitcoin is effectively a large clock, because every 10 minutes there's a block, and that block is how we track and keep time and keep transactions moving throughout this ecosystem. And those 10-minute sequences are produced by the miners. So as more people join the Bitcoin mining community, the clock gets a little bit faster. And it's okay, now it's 9 minutes to mine a Bitcoin. But we have this unique invention called the difficulty in the Bitcoin mining system, which automatically calculates how hard it is to mine a Bitcoin block. So the first Bitcoin blocks were, you could mine them on your computer, on your GPUs, on your CPUs. And then it started getting more specialized and doing trillions of hashes per second. And a hash is a mathematical equation where I'm basically guessing the reward, or guessing the height of a block, or trying to guess for like this new block. And so what's happening with these computers is they've gotten better and better over the years, doing trillions of hashes a second. And so these computers are always competing, trying to find these blocks. And then, as I mentioned, as more computers join, it becomes harder. As computers turn off, it becomes easier. And that's kind of the market dynamics we're seeing today. I might have digressed from your question, but that's how electricity is sold from this local marketplace through the computers into the global marketplace, with Bitcoin buying every 10 minutes new energy from all the miners.
Yeah, well, in many ways, those digressions about understanding the broader context are the point of a conversation like this, so that people can hear from someone who's been involved in the space for many, many years. You started when you were incredibly young. Tell us a little bit about your own journey into Bitcoin and into mining more specifically.
So I found out about Bitcoin in 2013, and I was learning about the technology. I was reading about on Wikipedia, and I was a freshman in high school. And the reason why it intrigued me is because there was no boundaries per se, or I guess gatekeepers stopping me as a young 14-year-old high schooler to get into this space. I barely had a bank account at that age. I couldn't get on Coinbase. I had to go ahead and buy Bitcoins with my mom. It's helped because I wasn't 18, but there's still this fundamental opportunity of saying anyone in the world can have access to this financial network. Doesn't matter your race, your ethnicity, what you believe in. And that really resonated with me as a young individual. And so I started learning about, okay, why is Bitcoin unique? What does it solve? And it solves this problem about trust. And when you're a high schooler, you're a little, you're not necessarily not trustworthy, but you're a little like authority. You don't like it if people can tell you to do something. And Bitcoin solves this problem called the Byzantine generals problem. And it's like the exact situation of that pushy 13, 14-year-old who thinks they know everything. It's like, I can go on the internet and I can participate in the set rules of Bitcoin and how they're set up. And I have to follow those rules, but they're defined. So there's no like, well, this is the rule because I said so. And that was a big thing for me as a kid. And in high school, I would like read the rule book and read the policy guidelines to make sure that I could follow the policies, by the T and knew them so I could use them to my advantage. And so when you get to Bitcoin and this Byzantine generals problem, effectively what it is we're all going to agree to attack the city at once, or we're all going to agree not to attack the city. And that's that's called consensus. And it was very hard to not get consensus on the internet without having someone have a higher authority over another member. But as a Bitcoin miner, I realized that we got to consensus by having people invest infrastructure and energy into these mining devices in order to achieve this consensus.
Yeah, that's really a fascinating metaphor. As someone who once was a rebellious high school kid, this idea of decentralization, of basically having authority spread out. Another way of, I guess, talking about this problem is the problem of trust without trusted third parties. In other words, the idea that you can have a network itself that through consensus, through proof of work, has the ability to distribute trust rather than having, an authority, a bank, for example, that says, okay, this transaction's okay. JP is sending Ash $100. We can verify that it's in his account. We'll send it to Ash's bank. They can verify that he is who he says he is, and we'll do the transfer. This is a radical departure. And I don't mean to sort of get into hyperbole before, when we talk about this, but this really is the first time in human history that you could have a network with distributed, decentralized trust, where there was a mechanism for all of the participants on the network to reach consensus collectively together.
And that's the unique innovation here with proof of work, is that we're able to reach that consensus by having individuals invest in their infrastructure and buy energy. But now if you take that step farther, that means that everyone's on a level playing field. If I'm a government, if I, like El Salvador, if I am a company, if I'm an individual, we all have access to electricity, and everyone has to use that electricity. There's no cheating. It's not like, oh, I have this electricity machine here that's going to make electricity for free or at no cost. So everyone has these real raw inputs and these raw costs. And then what it does is it makes it so that you're incentivized to find energy infrastructure that no one in the world is using, to find the cheapest energy possible. Wind farms, solar farms, energy without a fuel source is usually the cheapest. So that's what we're focused on as large institutional Bitcoin miners, is always looking for the next spot where no one's buying the energy and then exporting it from that local marketplace, which could be in Alberta, Canada, up in the mountains. It could be in the middle of the Midwest where there's only small towns, and sending it to the Bitcoin network. So most of the energy actually goes to waste. And that's what a Bitcoin miner, and that's what's nice about Bitcoin miners, it's like anyone can do it. It doesn't matter how big or small you are. If you're a nation state or individual, you have access to energy. You can play this game of exporting energy from your local marketplace to the global one of Bitcoin.
Yeah, and another way of talking about this is going from a system that's based on rules and contract enforcement to a system where ultimately it's the laws of mathematics and physics that govern the trust of the network.
Exactly. We're trusting physics to handle our money. No more politicians, which is amazing. And that's why I was so excited as a young lad and at 13, 14 years old. And then going into high school, I started the Miningstore in 2016, started mining Ethereum, ended up scaling to facilities in North Carolina, and then all the way up to Oregon, and then the Midwest and Iowa in 2019. And now we're saying, how do we buy wind farms and scale there? So it's been a massive journey all the way from the first device I plugged in my parents' basement when my dad and myself, wired up some extra 20 amp circuits and was running in a cardboard, a milk crate with GPUs across it. And today, where you have massive shipping containers, 30,000 square foot buildings we're producing, and you're actually buying the wind farms themselves to generate the energy. It's been such an incredible journey.
Yeah, I mean, it really is just an extraordinary technical story. I should say, even though I'm very excited about this technology, there are all kinds of risk factors associated with this, risks, uncertainties, criticisms. We'll talk a little bit more about those in a few minutes. But I want to just continue to walk through the way that this works and how you participate in it. Because as you say, this business has scaled pretty extraordinarily for you. There, if you Google your name, there are all kinds of articles that say things like, the 24-year-old who makes over $1 million a month mining Bitcoin. You've been able to move this operation from something as a high school student, as a hobby, into an industrial scale business. Talk a little bit about what some of those challenges were, and also what the opportunities that you saw, and why you were so interested in getting into this business at an industrial scale.
So when I started off, it was manageable and it was small, and all it was about was that one machine in front of you. And then I realized that, okay, if I wanted to leverage my time and if I wanted to leverage my skills and knowledge, I needed to find capital. And so I went in, put up some capital myself. I convinced my grandma and grandpa at the time and my uncle to put money into a project. We put $100,000 in combined into mining Ethereum. Now, at that point, I went from 2 machines to over probably 300 GPUs, so roughly 60 to 70 machines. And that was the first kind of taste of scaling an operation. And the reality is, it's like running one machine, you have a little bit of problems, but running 70 machines, you start to scale up in your issues, having to maintain them. And so I began to learn, began to use better software, better systems in place, right procedures, and start hiring my friends to help me service these facilities and service these machines. And as time scaled, as I was younger, I was selling this equipment online to others. So I wasn't necessarily growing my mining operation or building out any infrastructure. I was simply providing a service. And I was getting other people into mining, consulting, helping people out like PRTI with their waste tires, to turning tires into energy, then into Bitcoins, and working with the Sacramento Kings on mining for charity out there with our Mining for Good program. And so overall, time would just kind of bring me a new opportunity of like, hey, here's a Bitcoin mining opportunity, here's an Ethereum opportunity. And by the time 2019 came around, I was dropped out of school because I wanted to focus on this full time out of college. And I was decided, what's the next step? And that's when you start having to raise capital from your family, friends, from your network, from the group of investors. You start sharing your story and you start telling people, here's what we're going to do. And I found this location in Iowa, actually where I'm here today, and we started building out a facility there. And then we started hiring technicians, a sales team, people to market and run the operation. And the business goes from a Shopify store with one person, myself, to a business with over 30 people running day-to-day operations, growing, building software to make it better. And my overall, I guess, dream at the end of the day is that anyone can get into Bitcoin mining at $100 or a small amount of money. And so what we were able to do is we were able to work on improving not only the regulatory structure, but also the mining facility to have stability and figure out how we can get people into this space. And we ended up coming across something called the regulated crowdfunding, which is a new rule that came out in 2021 that allows anyone to raise up to $5 million from their network. And you can have the donation, or the investment, be as low as $100. And so that journey has brought me from my one rig to now back to one rig where anyone can get started for a small amount of money. And so over the years, you're focusing on the large scale operations, which is 80 megawatt data centers, fundraising for that, $100 million plus projects, but then also still focusing on the $100 one, making it accessible, making it so anyone can use the energy and mine Bitcoin. And so my story has been trying to make that Bitcoin mining opportunity available to everyone and provide them an idea of this is how you become economically free, by leveraging these computers to mine Bitcoin and cryptocurrencies on your behalf. And you're going to leverage that capital stack. You're going to leverage this opportunity. And instead of you going to work every single day, you can now put 10, 20, 30 computers to work for you. Now, as it grow, you need more capital. And so it's like this constant cycle, but it's more about like, how do we gamify it? How do we make it accessible to everyone? And that's what I've been focused on over the past, I would say, year and a half.
By the way, you may have just noticed a quick edit and a cut here. We actually had to cut because we were troubleshooting some internet issues. One of the really fascinating things about this conversation is that this conversation is being beamed via satellite. You guys are using Starlink out there in Iowa. What's that like? And tell us a little bit about how that plays into the business strategy.
Sure. So we don't build redundant energy connections, but we do have redundant internet connections. So we use two internet providers out here. One is a local like a radio wave Wi-Fi connection, which is called terrestrial Wi-Fi, which will go from a radio beam per se and shoot the internet to a tower that's connected to the fiber backbone here in Iowa. And in case the fiber backbone goes down, or in case there is a storm and let's say something gets knocked out or a fiber line is more appropriately cut when they're doing new developments, we immediately switch over our internet to Starlink, which has very, very little downtime. And it goes from Starlink, which is the satellite here on top of this roof, and it will shoot up all the way up to a low orbit satellite and then come back down and be running with the miners. So that's how we use internet at the mining sites. Is you want to have two redundant connections, because if the energy goes down, you're down either way. But if the internet goes down, you can store the energy, and now you're not printing new Bitcoins.
Yeah. So we should say low Earth orbit, also called LEO. These are satellites that are geostationary, I believe, and they are in orbit at some, I think, 2,000 kilometers, 1,200 miles above the Earth's surface.
Exactly. And so it's super cool to be able to mine Bitcoin using Starlink when we do switch over in those times of the year when there are fiber cuts on the fiber network.
By the way, I should say, switching gears here a little bit, you can obviously tell when someone like JP and I have a conversation like this, we're obviously super excited about the underlying technology. It's really cool. It's really geeky. It's really fun. But I also want to make certain that we give adequate time to the risks, the uncertainties, some of the challenges, specifically as we have this conversation here today in mid-June 2022, when we're so excited about the network, which has continued to perform, to do exactly what it was designed to do. Obviously, there's been dramatic fluctuations, dramatic volatility in the price. As we speak today, Bitcoin is trading in the $22,000 range. That's down considerably, some 2/3 from, I believe it's November 2021 highs of around 69,000. So obviously a significantly decline in price. That's meant pain for people who invested in Bitcoin. Talk a little bit about, first, what the impact of those price declines are on the broader ecosystem, and second, how it impacts your business model as an industrial scale miner.
Awesome. So Bitcoin mining, or Bitcoin in general, goes through a 4-year cycle, and that comes down to the halving cycle. So every 4 years, we go from mining 5 Bitcoins to 2.5 Bitcoins, or from 2.5 Bitcoins to 1.25 Bitcoins. And so right now, we're currently mining 6.25 Bitcoins per block. And so that halving cycle starts this brand new process of new supply and new demand when it comes to Bitcoin. And so right now in this market crash, we've seen, if you look out every 4 years, that in about this 1 year period where we're crashing today, we've crashed 3 other times where we have a low. And so what does that mean for the individual person? Because we're excited, super excited to get into Bitcoin when everyone's talking about it. But we're not excited to get into Bitcoin when it's down in price, when no one's talking about it, because we don't know how low it's going to go, or we don't know if it's still going to be around. But as a long-term Bitcoin believer and someone who understands the fundamentals of Bitcoin, that it's backed by this massive amounts of energy and infrastructure, we understand that it's important that you use these opportunities as a way to build a position. If you're out of cash, then this is a way to start trading your services for Bitcoin. This is a way to protect yourself by going what we call long on Bitcoin, but you don't know where the bottom is. So what we tell other people in the mining space is, when the times are great, when you're making tons of Bitcoin money from mining and the profitability is great, take some money off the table. It's not a bad idea to go into cash, because there will be times in the market where you will need that cash to buy more Bitcoin, and you'll need that cash to deploy your infrastructure. So as a firm, we're constantly shifting from a Bitcoin on position to a Bitcoin off position. And so when Bitcoin was at 60K, we took some money off the table and said, okay, we're going to use this money for when it is in a bear market, when we're able to then go and ensure that we can run through it. Because profitability, when it was 60K, was about 40 cents a terahash. Now, we haven't talked much about a terahash yet, but a terahash is the computational unit each computer produces. So they do hashes, and a terahash is a trillion hashes. And so that computational unit is, you can see the price of what the Bitcoin network is paying for that terahash. And right now, it's paying about 10 cents per terahash. Now, back when it was $60,000, maybe only 6 months ago, it was paying 40 cents a terahash. So the revenue we generate from going from 40 cents a terahash to 10 cents, which is a huge hit to your bottom line of your business, because you still have the same labor costs, the same energy costs. So as a Bitcoin miner, it's important that you have those capital controls and capital allocations in the right spot. Now, when it comes to why is this a good time? Well, because the equipment of a Bitcoin miner actually is worth as much Bitcoin as it's going to mine for about 2 years. And so when you're buying that equipment, it's priced on that approximation, and that comes from the manufacturers. So manufacturers say, okay, if 1 terahash makes 10 cents, that 10 cents a day per terahash is going to make $70, $80, $90 before the halving event. That event I talked about that happens every 4 years. So that's how much we believe the machine should be worth, minus the power costs, minus some other costs. And that's kind of how you get the equipment cost. But if a terahash is worth 40 cents, well, then that machine is going to be trading at $12, $13, $14,000, or on a per terahash basis, $110, $120, $130 a terahash. Right now, you can buy a terahash, the same one that was selling for $130 in the Bitcoin mining unit, for $45, $50 a terahash. So the prices come down dramatically. And so we look at these opportunities in the market are a great time to pick up cheap machines that people are selling because they may not have had the best capital allocation strategy, and to put them to work if you're a long-term believer in Bitcoin. But that's where it comes down to. You got to believe this isn't just going away. You got to believe it's not going to zero. You got to understand that possibly right now we're in a once-in-a-lifetime opportunity to buy Bitcoin at these prices before the next halving event, where Bitcoins are going to become scarcer because of the cost of energy to acquire one coin will be double than what it is today.
So do your investors, do your bankers ever say to you, JP, I'm glad that you believe in the long-term value proposition of Bitcoin, but you're telling me that the profitability of your business has just declined 75%?
Oh, they actually emailed me this morning asking me to answer that exact question. I still haven't answered it yet, but it's right. It's like, where is your conviction? How are we still profitable? How much energy does it cost for us to make a Bitcoin? Right now, our production cost is about 15 grand to 14 grand per Bitcoin. That's before you add other costs on it. So yeah, right now we're basically breaking even, if not losing money. But for the past 6 months, some of those months have been amazing months where you're stacking sats and you're stacking your Bitcoin portfolio. So yes, you might need to sell some Bitcoins now if you didn't sell them appropriately, or you can take some of that cash and pay the losses as you move over for the next couple of months. But what we see is that the price of machines will readjust, the energy price will stay the same, and the people that are running older machines that aren't as efficient, they'll be forced to turn off. So we will see a correction from that 10 cents a terahash up to maybe 12, 13, 14 cents a terahash. Now, it's not 40 cents, but there is that natural game theory in the mining space, which if you have low energy and you run an efficient mining operation, then you'll be able to outrun and perform and continue to grow your business like we have over the years.
You know, one of the terms that comes up numerous times in this conversation is this idea of industrial scale mining. What does that mean? What does it mean to you? And walk us through a little bit of what the physical mechanics of running a large facility are.
So industrial scale mining to me is anything more than 10 to 15 machines. Once you get over that, you actually can't run that at your house anymore. That's more than 200 amps of energy, and so you can't run it on your normal circuit. So now you need a dedicated facility, either a warehouse or a mining container or a custom built building. And so for us at the Miningstore, we started off with mining containers. We had 2 large 40-foot containers, and those 40-foot containers have spots for 700 S19, which are a particular model of Bitcoin miners that we utilize. Each one of those containers distributes the energy from what we call a switchgear unit to the machines. So the switchgear, you can think about it as like your 200 amp panel inside of your house, where the energy gets distributed to all the other outlets and all the other circuits. And that's when, if you use too much power, that's breaker is going to flip at your house. And so for us, we have a massive breaker, and these breakers are 400 amps each. And so they're huge, and there's only a few of them that'll power all 700 machines. And then that switchgear feeds something called a PDU, or a power distribution unit. And that power distribution unit has a bunch of plugs on it, maybe 24 to 32 plugs on it, each which plug into the Bitcoin miners and give them the energy they need. And so that's how the power flows, as it goes from the machine to the PDU to the switchgear unit. And then from the switchgear unit, it goes to a transformer. Now, the transformers are those little green boxes you see around your house or in your neighborhood, and that's what steps the power up from a low voltage to a high voltage. And at that high voltage, it then goes on to the substation, which is an electrical grid substation, and that provides the power and steps it down to you. So when we travel or transmit electricity, we increase the voltage, and when we like to plug electricity and use it with our devices, we decrease the voltage so it's safe and the computers can use it.
So, how does the mining store rank in terms of terahash production or computers, the ASIC miners, relative to other mining operations here in the United States, so people can get an understanding of the scale of this industry?
Sure. So our facility here in Iowa at this current location is 6 megawatts. And we have a substation at another location, which is 5 megawatts, and then another one, which is 5 megawatts. And so we scale at the local grid level at each one of these substations. Now, if we count up all the facilities and infrastructure that we have going into deployment, that's about 20 megawatts here in Iowa. Now, at 20 megawatts, we are roughly maybe a quarter to 0.5% of the Bitcoin network. So not even 1% of the Bitcoin network, not even 2%. So this network is massive. There are facilities like the Winston and Riot in Texas that have 800 megawatts at their facility. And so that amount of energy is being consumed by Bitcoin across the world. And we're a small blip on the big game of things, or the big scale of things when it comes to our operations and how much hash rate we have under management.
One of the great and sort of controversial debates in the Bitcoin space is around ESG, is around environmental impact of Bitcoin mining. You hear this argument. I think it's really interesting when you listen to people on one end of the spectrum who say essentially this is the worst waste of energy that humankind has ever dreamt up, and people on the other end of the spectrum who are very pro Bitcoin who say actually Bitcoin is creating more efficiencies. It's creating the capacity to develop new renewables, new green energy. Where do you fall along that sort of very vast continuum?
So I fall where I believe that Bitcoin in its energy usage will optimize the grid, simply because the grid is energy that has to be used immediately. And so we have to match that production, that consumption. Now, in order for us to generate more renewable energy, more solar farms, more wind farms, that energy is variable. We need to have consumption that we can turn off. And so our facility, even this afternoon, when it's a hot summer day in Iowa, we'll be turning off because it's going to be one of the hottest days of the month. And this facility will turn down for an hour, 2 hours, 3 hours, and then we'll turn back on once the sun sets and once the energy usage has declined across the grid. So instead of having to turn us off if we weren't here, the only way they could meet that demand is by turning on coal and natural gas additional generation. Now, for a 5 megawatt facility, we're small. We're not as big as the big guys like Riot, but we still use more power than the community. And so when we turn off, we're effectively ensuring that everyone in this community can have their energy to utilize, and that they don't have to go buy natural gas and coal to provide the power to those community members. So this is a significant impact, and the only way that we get to moving the grid into farther renewable energy generation is to add either consumption or the batteries. But batteries aren't cost effective when it comes to a per megawatt basis. They're significantly more expensive than putting in consumption and putting in a Bitcoin mine. And Bitcoin miners in the game theory, we're always going after the lowest energy. We're going after energy that no one else wants. So we're not coming up to your energy source that is expensive, that other people are paying a high dollar for. We're going to energy that would otherwise be wasted. At one of our wind farms that we're looking to purchase in Texas, half of the times, over 60% of the time actually, it's curtailed, which means that energy is generated from the wind turbine and goes straight into the ground. And you would say, why is that happening? Well, it's because the grid is full of energy. It already has too much energy from all the other wind farms around it. And so the energy has to go somewhere, and it takes so much time to dissipate the energy as heat. And so the energy can't go on the wire. It can't get to a consumer because there's no load out there. It's in the middle of nowhere in Texas. And so Bitcoin miners are one of the only load resources that will be able to go utilize this energy and then actually turn off when there is a Texas freeze or when there is a hot summer day and the grid, everyone does need that energy. So that's how I see Bitcoin just playing on the energy side. Then you can look at sustainability and governance and you can say, wow, Bitcoin's actually allowing anyone to create their own money. That sounds like a pretty great thing. Then you go to the next step. Bitcoin allows anyone to send money across the world with low fees and low intermediaries. Well, that also fits an ESG framework. And so ESG is more than just environmental impact.
Yeah, it's really interesting. And I struggle with this in my own head. On the one hand, any increase in aggregate consumption of energy seems as though it's a negative. That's a compelling argument. On the other, grid optimization, grid modernization, wholly separate and apart from Bitcoin. If you talk to people who are very serious about looking particularly at the US energy grid, they have been flashing warnings about the risks and the desperate need for modernization of the US energy grid now for many decades. So it's a really interesting open debate, but it's cool to just give a sense of some of this to people. Most of us don't spend a lot of time thinking about the energy grid. When we flip the switch, the light goes on, and for the most part, we're pretty satisfied with it. But it really is an interesting open question, and so much more to come, I think, on that topic.
100% agree with you. Bitcoin miners only going to need more and more energy, and it's going to have to be better integrated in the grid. The nice thing about it is now that the energy companies are saying, how do we use Bitcoin mining to our advantage? Even one group we have that we're in discussions with, they heat the district heating. So they heat different downtown districts. And right now they just run a natural gas turbine to heat it up. But they're like, what happens if we actually use the energy to mine Bitcoin, heat the water up with the Bitcoin up to a certain degrees, and then heat the rest of the way up with that natural gas turbine? So people are very, very interesting on how, very unique situations on how we can use the excess heat from Bitcoin to have other uses, such as heating our homes.
JP, obviously today, a fascinating conversation. Great to have you on Real Vision. I'm sure this is only the beginning of this conversation. So much more to talk about in this space. But for what we've covered here today, and we've covered a lot, final thoughts, key takeaways that you'd like to leave our viewers with?
My key takeaway is learn more about what backs Bitcoin. Understand why it has value, the network behind it, the opportunities it's bringing to people across the world. And don't forget to dollar cost average. Buy a little bit every day. It's hard for everyone to come in and buy $10,000 worth of Bitcoin at once. So try buying a few Bitcoins, a few Satoshis every day.
Yeah, we should say, of course, not financial advice. Don't take financial advice from anyone on the internet, but a great place to start the conversation, a great place to have a conversation with your advisor, with your financial advisor, with your financial planner. Much more to come here talking about this conversation about Bitcoin mining. JP, thank you so much for joining us on Real Vision.
Thanks again, guys.
Thanks for watching, everyone.
We hope you enjoyed the video. At Real Vision, we help you understand the complex world of finance, business, and the global economy with in-depth analysis from real experts. Join the revolution at realvision.com.